everybody, and welcome to Data Warlord 9000's Bitcoin analysis of December 28th, 2020 at 12 or 11 a.m. Chicago time. Well, so I'd like to start off with this Bitcoin chart. As you can see, we're rocking into rocky waters again. Um, and I think it's good to look at this like an opportunity. If things trend a little lower, you might be able to get a better price if you missed any of the kind of the good prices that were going on around here. And so, real quick, if you're thinking, this is the end of Bitcoin, we're all going to die, the interest rates are kicking in. Well, you're a little too early on that thought process because the interest rates are not really going to be around till March for starters, and we'll probably see the full effect in May, and that's when the market corrections will happen. So I still think we got a little more time to make some money in the first quarter of 2022, but just the first quarter of 2022. So, be careful. But long story short here, I'm going to go back and explain my rationale. If we look back to, September 9th, where we had a rejection at 53 after having a bear market of, the fucking summer, we had a little bit of a dump, and it's gonna probably get worse if all things considered. It's not a good look for Bitcoin, and so if you're really concerned or you're short money and you went in, this week, or you thought, I'm gonna get some bought at the top or whatever, like many people do. The only thing you can do is understand that you got to go longer. If you're a trader and you think in very short mindset, like, oh no, my portfolio is on paper down, therefore it's never going to go back up. It's not a good thought process. So really consider averaging your position now. It's the only way you're going to dig yourself out of this hole if you bought at the top and things get worse. Now, I'm not saying they do. I'm not a bear, but I'm also not a bull running into slaughter, I'm not trying to get carved down to being a steak. So I'd keep your eyes open, and I think this dip could really will know the full extent around 47. But realistically, this kind of process needs to happen. We're still in an accumulation phase. We're not even in this correction. It's not even as long as in many of the other corrections this year. So we have a couple more days to see how things go. But obviously we want to see a rally into January. And I think we will, because then there's going to be the capital redeployment from many of the hedge funds at the beginning of January. And with these, historical data of so many currencies being, some of the greatest asset purchases in history, Bitcoin being one of them, there's much room for institutions to start throwing money into these projects, especially with the threat of inflation, and the Oma burger, depending on how the Oma burger handles. Which by Oma burger I mean Omicron. And so I understand that people have fear about the interest rates because people are way too deep in a margin, and the incoming potential debt bubble that could be around the corner. But, understand that we still got some good breath in this economy till at least March, housing refinances or mortgage refinances went up 71%. So people are still spending, and the consumerism patterns are huge. So, if you're a new trader and you're like, I'm going to die, take a break. Go on vacation is what I always say. And you don't want to sell at a loss. You want to either average. And if you can't afford to do that, then next time you need to consider looking into dollar cost averaging and how you want to go about that, which means to, for example, let's say I do, I got 100%, so I got 10 grand, and I start my position off with 50% at, say I'm buying Bitcoin, and I got 10 grand, I'll start my position off over here maybe at 46 because I'm smart. Or for the sake of the analogy, let's say I get it at 50, because it's a good dip from here. And then I average, 25% at 46, and then I wait and see, and then I average another 25%, So if I'm at my shitty cost, still half of my cost is down here, which means if it goes up a little, I'll meet my cost halfway a lot easier. It's a way to secure yourself from getting owned. But if the market's dumping, then you're going to get owned regardless. But take advantage of these dips. You want to buy on red days with FUD in the air. And real quick, if you're one of those FUD deniers, FUD stands for fear, uncertainty, and doubt. And these fears and the uncertainty in the market and the doubt of market health are very real things. So don't be so offended when someone points out the obvious. You need to look at these FUD days as a buying opportunity and these green days as a selling opportunity and not a buying opportunity. Swap your mindset around and go longer. And then I'm going to go into some projects, I think, if the dip goes further. Obviously, Solana is a really good one. Even now, I would buy it. I own a lot of Solana, so, conflict of interest, but what can you do? Ethereum, though, taking a major hit today. Really don't know what's spurring this, Yeah, and it could be that, I don't know, I guess I'm going to have to do some further research, but we also have XRP. Geez, XRP getting crushed. Cardano being fine. I know there's a lot of people that like to shit on Cardano, but if you had Cardano at $1, you wouldn't lose money at any point in the market, but you wouldn't make any either. So there's that. And then Shiba. Hot take: don't buy Shiba unless you're a gambler. If that's the case, then if anyone wants to play Baccarat on Decentraland, hit me up. And then Crypto.com is a really good buy. I'd definitely buy Crypto.com right now, actually. Just seeing this. And then another one. I hear a lot of talk about Near, but obviously a 7-day 50% run up is probably not a good time. Make a position. But what do I know? Phantom, here we go. Phantom, any Phantom in the range of $1 is a good buy. $1.50, obviously. Don't own any Phantom. Wish I did, but Sandbox maybe. People really like Sandbox. Theta Network had a new NFT game come out. It's okay. The TN Arena, Gala Games, pretty big project gonna be soon. And then I'm gonna bring up my low alt cap gem that I am invested in, which is, I believe, I also Qtum is another one. Storg is always good. People don't like Storg. Storg is a good coin though. It is consistent. It's weird, but the storage industry coming into cryptography is going to be big. Anchor Token's another one. I like Anchor Token. Facebook has said they will use Anchor Token in the future for their metaverse project, so that's a good idea. But anyways, let me see if I can find. Cartesi. This is a very good project as well. Cartesi is basically a blockchain that interacts with Linux and is a Dubai project funded in Dubai, so based in Dubai. And as far as if you know anything about the business world, they be pumping out some good shit, except for that palm. The palm over there is a little kind of a stupid idea. Let me see. Can I find their website? It has really good staking yields. If you're interested in staking, and if you're interested in staking, you're gonna want to go longer. But let me see. Let me find the staking, Cartesi staking part of this thing. Use, yes, I staked. Is it staked? Yes. Your staking annual yield is 46%. And that's pretty fucking big. And Cartesi is linked to Polygon and all sorts of other projects. And it's a low cap, 300 million market cap, with some pretty good highs. So Cartesi, I think, is going to be a good project. I'm in around 50 cents. I've been in for a while. I'm looking to get more out of it because just from the website quality, their YouTube, their developers, there's a lot to say what could happen with Cartesi. And then there's one more project I want to go over, if I can find it here. I'll just show here though. This is the chart. This is HXV Haven Protocol. It's a I'm short on this one. Only got 1,000 in this one, but it's a project that is a stable coin redistribution kind of thing. It's very interesting. You have to do your own research because I'm hashtag not a financial advisor, but it's basically like a privacy stablecoin, and stablecoins are hot depending on what the U.S. government tends to do with them. And I think that we might actually not have such a bad time with stablecoins because it seems like our relationship with our politicians has improved a little bit, except for a few goofballs in California, particularly that one bald guy. I'm not going to say his name, and Elizabeth Karen, or Senator Karen, as some of the cool people like to say. But anyways, good project. Stablecoin reissuer for privacy. It's pretty important to have privacy in stablecoins if you know anything about them. And it's the $71 million market cap. Tons of room for growth. Has hit all-time highs of $20 just earlier in November. So there's a ton of potential to get a bag on this one and accumulate, because I've been accumulating this one as well. Just a little bit, trying to make some short money. But anyways, moral of the story is, don't panic on Bitcoin. Expect the prices to get worse. And please like and subscribe.